You probably heard people talking about this idea of a 50-year mortgage. Some are excited, some are caught up in the politics of it all, and some are even terrified, thinking it's the early 2000s all over again. But is it really that, or are people just reacting to a headline instead of to the real issue underneath of it? Before we go any further, let me just say this clearly. This is all still very hypothetical. Currently, there's no 50-year mortgage available today, and these are all just early conversations, early opinions, early speculation. But because this is a topic that's gaining traction, it's worth really unpacking what's actually going on. When I first heard about it, my knee-jerk reaction was probably the same as yours, like 50 years? Seriously? I mean, it sounds extreme. It sounds risky. It sounds like the interest-only loans from back in the day, and so I get why people are reacting the way that they are. But before we jump to conclusions, I think there's a better question to ask here, and it's this. Why is this even being talked about right now? Because the truth is, the real story here isn't the loan itself. The real story is the problem underneath of it. Right now, the housing market is gridlocked. Millions of homeowners are locked into super low interest rates with 4%, 3%. Some lucky bastards even still have 2% interest rates. And if they sell today, even if they buy something the same size, the payment jump is huge. It feels impossible. So what do people do? They stay put. Move-up sellers, stay put. Empty nesters, stay put. Even people who want to move don't. Compounding the problem, population is growing and new construction homes haven't kept up with increased housing demand. And as a result, when people don't move, inventory dries up and prices stay high. Ultimately, buyers get squeezed. It's economics 101, supply and demand. And in a low supply with high demand situation, it always results in higher prices and inflation. So the biggest issue we're facing isn't exotic loan products, it's affordability, it's attainability, and it's a market that's stuck. Here's an analogy that might help. It's kind of like what happened with car loans. As cars got more expensive, they needed a solution. Manufacturers looked to ways that lenders could solve the problem, and they ultimately ended up stretching loan terms from 5 years to 6 years to 7, even 8. Costs kept going up, and so they tried to find a way to make the payment feel manageable and attainable. A 50-year mortgage might be aiming at something similar, just with a smaller impact. But let's be clear. Even though it sounds like interest only, and in some ways like you're still betting on the market to improve to capture equity, structurally it isn't similar at all. There's no teaser rate like interest only that we're just waiting to jump. There's no sudden payment shock. There's nothing hiding in fine print. It's just a longer runway. Nothing more, nothing less. Now, I'm not telling you it's amazing, nor am I telling you it's terrible. It has pros and cons. On one hand, stretching the payment just a little might help people finally make that move that they need to make. It might finally help some people, like first-time home buyers, finally enter the market, or move-up buyers finally make that move, and even a little movement can help unfreeze some inventory. On the other hand, it's a long timeline. You build equity slower. You pay more interest over time. So it's definitely not a magic fix. So is a 50-year mortgage the hero? No. Is it a villain? Also no. It's just one idea that's being tossed around to address a market that's gotten too expensive, too tight, and too hard to move around in. And whether it ever becomes reality, or whether it ever makes sense for someone, depends entirely on the situation. But if you're curious how conversations like this affect your plans, or just want to talk through options without any pressure, reach out anytime. I'll always have your interest at heart.